Okay, so now I'll take a look at the bond market and the dollar. So starting with TLT, which I rarely do. Look at this. We're very close to reaching prior support. So this should act as resistance. I'm not sure where. 90 is a big round number. We closed above 90. We could go a little higher. Once we look at the yield charts, it looks like we may actually go a little higher. For me, you don't want to get too picky. 92 really is where I would close the long if I had one. I don't. But I mean, gaps you should ignore on this chart. There are constant gaps, but I feel like 92, right? I mean, price support. Haven't really tested it as resistance, but I'm sure it will work. So TLT, watch 92. Otherwise, where we are now is pretty much resistance. You don't want to get too greedy. So, we've had a nice bounce. Bonds have gone up with the markets ever since, the market starts to consider the rate increases being over. So yeah, that's on the TLT side. The 1 year I ignore now because it's just hard to call. I mean, yeah, sideways down, but I don't look at the 1 year too much. The 2 year, which is actually the most important one, that one is hard to decipher in terms of where support will be. There's no clear support for me. I'd prefer to look at other charts, TLT included, otherwise the 10 year and the 30 year, but the 2 year, it could just go a little lower, 4.7, maybe 4.6. But I think at 4.6, it does find support otherwise. 5 year, it gets a little easier to read, but still, this is prior resistance here. So we've, it coincided with the ascending. We flushed that already. So after that, it doesn't get too easy anymore. So I don't know. The 5 year, it's hard to read where it is. I don't think there's a clear technical indication. So I'm not going to guess it and pluck some random out of thin air, some number out of thin air. So, 4.2 maybe. I prefer to look at the 10 year. 10 year does highlight a support zone just here for me. So 4.3-ish, right? I could be off by a few. I feel like this prior resistance here has not really been tested as support yet. You could say almost did here, but not yet. So if we do go lower across the board here on the 1, the 2, the 5 year, maybe the 10 year will be the first chart in the series to provide some support for the others. Likewise, the 30 year also has support coming up, and I don't know whether it's there. I don't know if it's there or just to make a general average. We'll also have this ascending one here creeping up. So I feel like 4.4-ish, the zone is support on 30 years. So we can go lower in yields. Just like I said, we can go a little high on the TLT. But if we do, I think TLT 92, but the 10 year and the 30 year, 10 year 4.3 and the 30 year at 4.4-ish, those zones should all coalesce and act as a bit of a reversal. So that's my take on the bonds. Now let's look at the dollar index, which I thought we'd come back down to 104.5 when we were all the way up here. Actually, that's nice. We didn't actually. We went straight past go. We closed on this big bearish day. We did retest 104.5, and that did act as resistance. So that level does stand as a level. It's just the dollar's been too weak to even hold this zone. So it never really held that zone. And now look at this Friday, we closed at low of day. That's very telling stuff. And if you look at the currencies, for example, the euro US dollar, you can go a little higher at least. The dollar Japanese yen, I mentioned this the other day. This is a level, and first of all, what a coincidence that we found resistance at 152-ish, the absolute line in the sand. And look, once we close below this 149, we should flush a little lower. Next level of support, not that easy to tell, but it could actually be as far down as 145. So the Japanese yen has some strength in it, and therefore the US dollar Japanese yen can go lower. Okay, the pound doesn't count too much, that can move higher. But the point is, I do see room for a lower DXY, and I think the next level of support, and I think ultimately where it's going, is 103. So the Japanese yen, the euro combined should be able to push the DXY down to 103. That's my take on, and that doesn't mean straight away on Monday, but given the close, it could actually do that. So short term 103 on the DXY, and yields can go a little lower, which is bullish for commodities. Let me know what you think of that, but that's my take.